In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the ongoing trade dispute is taking a toll on major Apple supplier Broadcom. The chipmaker reports a big sales miss and cuts its full-year revenue outlook. Plus, Alibaba setting its sights on Hong Kong. The e-commerce giant has filed confidentially to list on a local exchange. And fake out, politicians are speaking out as deepfake videos flood social media. Will Congress finally take action? But first, to our top story, shares of Broadcom tumbling in after-hours trading after the chipmaker cut its full-year revenue outlook. The company said revenue will be $22 billion in 2019, missing even the lowest analyst estimate. It also reported second quarter revenue that missed projections, this as it continues to be caught in the crosshairs of the escalating U.S.-China trade war. Almost half of Broadcom's revenue was linked to China last year, with Huawei, in particular, accounting for 5.3% of sales. It's also a major supplier of chips to Apple. In a statement, CEO Hock Tan said, "We currently see a broad-based slowdown in the demand environment, which we believe is driven by continued geopolitical uncertainties, as well as the effects of export restrictions on one of our largest customers." Joining us to discuss, Bloomberg's Max Chafkin and Ian King with me here on set. So, Ian, of course, that last reference to customers is, of course, Huawei. How much does this have to do with Huawei in particular? How much does this have to do with China at large?
Yeah, I mean, this company is in the crosshairs. They're, arguably the best example of a company based in the US that's part of this global supply chain. Even stuff that they're selling that isn't going into the China market and staying there is coming here, is going to Europe. So this is them saying basically the worst case scenario, what you're all concerned about is absolutely true. And by the way, we have this giant customer as well that isn't ordering anymore because they can't. Right,
so they've had to cut off Huawei in particular. Yep. What about Apple, which sort of faces the looming threat of tariffs? Haven't hit Apple in a broad-based way yet, but there's potential concerns about demand issues in China, which could be government-related, could be just customers in China boycotting Apple.
Right. I mean, there are a whole range of scenarios, and as you mentioned, none of them are particularly pleasant. There's the macro slowdown. Is this depressing consumer sentiment? Is this causing a reflex reaction against U.S. products like Apple's iPhone? We've already seen Apple losing market share in China, so basically all of the above could be what's going on here.
Now, Max, of course, Broadcom is just one of the U.S. companies that has in the past supplied Huawei, which has been a big customer, not just for Broadcom, but also Qualcomm. Are we expected to see this through the year as other companies report results that have had ties to Huawei historically?
Yeah, I mean, it's a huge problem, and it's kind of a problem for the same reason that this trade war hurts Apple, which is that China is the big growth market for the technology industry in general. So all of these chip suppliers, including Broadcom and Qualcomm, are selling huge quantities of products to Huawei and other Chinese companies, and so they are definitely kind of the first on the firing line. Now the thing is, it arguably hurts Huawei more than it hurts their suppliers, because it's going to be very hard for Huawei to go about its normal business if it can't get the technology it needs to put things out.
So, Ian, meantime, there's a lot of interesting dynamics happening here. Hon Hai, Foxconn saying they could make U.S.-bound phones outside of China, so that could offset some of these issues. How does this play out for Broadcom? How does this play out for other chip makers that are also tied up in this?
Well, that's a very good question, and I think what we've been dealing with up until now has been a relative amount of uncertainty. We don't know how these bans are going to work out. We don't know which specific products are going to be halted from shipping to China. This today is telling us whatever happens, it's not going to be good. And back to what Max said, Huawei can get things from Europeans, from the Koreans, from the Taiwanese, can replace a lot of what it needs, but some of the things it absolutely can't, and Broadcom is one of the suppliers in terms of RF chips, in terms of switch chips, can't go anywhere else.
Max, meantime, Huawei waiting for potentially more bad news. The UK government making a decision about whether to include Huawei in its 5G networks. How much longer can Huawei sort of hang on here, as these decisions are made around the world that don't necessarily go in its favor?
So, I mean, in terms of Huawei's sort of customer base, Huawei does have access to some really big markets. So yeah, I mean, it hurts Huawei that it can't, do much business in the U.S. right now, or the fact that some of these European countries that have historically bought its gear are now kind of getting, cold feet. But they've had access to China, to India, and none of that is going to go away anytime soon. There is this interesting thing happening in Europe where the UK and some other countries had basically decided that Huawei equipment was okay, and they had come up with a testing regime that included this secret this building where the equipment was vetted, and basically Trump and this new U.S. framework for dealing with Huawei has thrown that all into disarray, where you have countries like the UK reconsidering whether Huawei can be bought without creating a security risk.
All right, Bloomberg's Max Chafkin and Ian King. Ian, I know you'll have more on this as more chip makers continue to report results. Thank you. Coming up, Airbnb expanding its experiences offering to become a bit more adventurous. Why the home rental giant continues to diversify before going public. Next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Airbnb is making fresh attempts to take a greater share of your wallet when you go on vacation. The room rental company expanding into adventure tourism, offering travelers the chance to search for UFOs in Arizona or track lions on foot in Kenya. This as Airbnb seeks to broaden its business in advance of an initial public offering, likely next year. To discuss, we're joined by Bloomberg's Ann Vandermeer. So what other kind of adventures can we get through Airbnb?
One thing that they're launching along with this is an 80-day trip. It's kind of supposed to be modeled after the Jules Verne around the world in 80 days. You'll visit 16 countries, but most of these tours are going to be in the ballpark of 2 to 10 days.
All right, so I will be asking for 80 straight days of vacation. I'm not sure who can do that, but okay. Airbnb has been pushing into experiences. They've been doing this for the last couple of years. How successful has it been, and how is this different from what they have already been doing?
Right, so it's kind of hard to say because Airbnb is private. They say it's going to be, experiences generally is going to be profitable by the end of this year. But they're really kind of doubling down on this.
So talk to us about how this adds a new revenue stream as the company plans to go public.
Right. Airbnb, in advance of its initial public offering, is really trying to diversify. They're looking at restaurants, they're looking at flights, and they're really looking hard at tours, kind of providing a marketplace for hosts to connect with guests and do, anything from a wine tasting to a bike tour to an 80-day trip around the world.
So what kind of competition is there? Of course, there are the big travel giants. There's Booking.com. There's, Viator, for example. What is the market like for Airbnb in this space, and how competitive can they be?
They think it's big. Marriott is another giant that's kind of getting into this. And you see a lot of startups, too. There's a German startup called Get Your Guide that raised almost $500 million. There's a startup called Peak Travel that raised more than $50 million. So you see a lot of companies kind of trying to come into this space because it's one of the few elements of travel that hasn't already been digitized. If you're looking to book a tour, you're often going to do that on a website or over the phone. Airbnb and a lot of these other companies see a big opportunity there.
All right, Bloomberg's Ann Vandermeer. Something we'll continue to follow as we chart Airbnb's road to IPO. Thank you. Thursday, Bloomberg's Eric Schatzker headed over to IAC headquarters in Manhattan to speak with CEO Jerry Levin. The two talked about the company's M&A plans, why he thinks breaking up tech companies isn't a terrible idea, and why temp labor hiring could be the next big thing. Take a listen.
We're we're planting seeds. We have been for a while, and we continue to plant seeds in new areas. One that I've been talking about a lot lately, I'm really excited about, is the temp labor marketplace, matching hourly workers with jobs. I think there's this notion in the future of one-click hiring, and I think we've got a company called Blue Crew that's making really great progress in this. I think when I look at the future of how temp labor gets into employers, I think something like Blue Crew, a marketplace that really matches labor and employers without resumes and interviews and these processes, I think is a big, big future.
Can you size that market in dollar terms?
Sure. I mean, right now in the U.S., just where we are, which is light industrial, warehouse, that kind of retail hospitality, is about a $300 billion market. Globally, much bigger. And then I think this works in lots of categories.
Right now, Blue Crew is a rounding error. Definitely. In IAC's results. How long does it take to become of material value to you?
Years. And that's, people forget, you mentioned it, but people forget how long each of these things take. People only start paying attention when they're huge and they're impactful, but they forget how long it took to get to that spot. I think we're years away from that being a meaningful contributor to Blue Crew, but that doesn't make it any less of an attractive investment to us. And again, we're going to put more capital, try and find more of these.
The way you typically get into new markets is by acquiring a small company that fits into sort of a growth opportunity that you've identified and then scaling it.
Sometimes, but by far our biggest business today is Tinder, which was started in this building, in this company, a pure from scratch incubation.
So where do you think the next best idea is going to come from? Is it something you're going to buy, or is it something that's already an idea that already exists in this building that just hasn't been brought to life?
I wish I knew. I think we're going to do all of that, and we had a board meeting yesterday. We were talking about this, and we were saying where are the areas where we can create value over time, and we said, well, we can grow our existing businesses, and there's massive upside in that. We said we can grow our kind of proving businesses, our small but proving businesses, what we call tomorrow's big businesses, which is Vimeo and Dotdash. And then we have these little tiny businesses today, but massive opportunities. And I think we're investing in all of those things for I think, pretty good opportunity.
When you're prospecting for M&A, you're probably competing with more capital than has ever been mobilized in search of growth than ever before.
It does feel like that. And that has forced us in many ways to go earlier, younger. So Blue Crew as an example, we bought it with, I don't know, it had $2 or $6 million of revenue or something like that, some irrelevant amount of revenue. But we looked at the opportunity and said, we'll make a bunch of bets in this thing. That is a reality. I think that there is this segment of the market that just that used to exist that no longer exists because there's so much growth equity capital chasing things. Things go from about to prove themselves to billion-dollar valuations kind of instantly with no stop in between.
Is there something wrong with that?
I think so, just in that getting those kinds of expectations going makes it very hard for a business some businesses will come out the other side, but it eliminates options for them in ways that I think will turn out to be challenging over the next few years.
Do you think this is a permanent feature of capital markets? You now have, and you have had for decades already, venture capital, and that's where you're competing for these small businesses with venture capital. And then there's this new source of capital called growth equity. I guess it existed before, but now you have TPG doing it, you have General Atlantic doing it, you have sovereign wealth funds doing it.
And you have Fidelity doing it, and you have
T. Rowe Price
and Wellington. They've all, by the way, done a very nice job, and I think they'll continue to do a very nice job. But yeah, part of the reason that exists is because of what's happened in the public markets. I mean, think about if you miss your growth expectations by 1% in the public markets, 1%, which is completely irrelevant on a 5-year investment horizon or a 10-year investment horizon, your value may change from day 1 to day 2 by 25%. In a private market, you don't have to deal with that, and that volatility can impact employee sentiment or kind of market sentiment, and you don't have to deal with that in the private market.
So you're a publicly traded company with a $20 billion valuation. If you could do it, would you want to do a $20 billion take private and be able to benefit from all of the things that you just enumerated?
No, I don't mind being a public company. 1, we have more scale, which makes it easier. 2, we're diversified, which makes it easier. 3, we have a set of shareholders that believe in long-term value creation, and we're working for that set of shareholders. And I think we're lucky in that regard. We didn't always have that set of shareholders, but I think we do now.
Joey, one of the things we've talked about in the past is digital regulation and the degree to which large platforms run effectively the internet.
Yep.
The government is turning a microscope on that. Antitrust regulators and others. Do you think that's a healthy thing?
Absolutely. I think it's fantastic. I think it's the right thing to do. Look, I don't think these companies are fundamentally evil. I don't think these companies are fundamentally trying to do bad things to the earth or to the country. They simply have a lot of power aggregated in very narrow hands, and that's a dangerous thing. Again, not because I expect them to act in bad ways, but because things can happen. If all your data is stored in one place and that company, which just happened to us recently, has a data outage, you've got problems with your email, your hosting, your how you're looking at your data, your KPIs. All these things can happen in one point of failure. That's hard. I mean, probably not smart for us to be set up that way, but all the tools are being congregated in a handful of companies.
Eric Schatzker there with IAC CEO Joey Levin. Coming up, many investors and analysts are celebrating an end to the crypto winter. Could Bitcoin crash again? And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network TikTok on Twitter. This is Bloomberg. Walmart is jumping on the blockchain bandwagon. The retail giant partnering with IBM, KPMG, and drug maker Merck to develop a blockchain network for the U.S. Food and Drug Administration to track drugs as they move through the supply chain. The idea to help the FDA better protect consumers from counterfeit, stolen, contaminated, or even harmful drugs. Walmart is one of many companies embracing the blockchain trend. Both Microsoft and Salesforce have introduced their own services in the last month. Joining us to discuss, Kadena, Head of Research and Networks, Monica Quaintance. Monica, thank you so much for joining us. So how exactly will this FDA project work?
So this is just part of a larger trend about large corporations finally starting to embrace blockchain. And this partnership in particular is interesting because blockchain allows you to have data that can be tracked to a very finely grained degree, and you know that people can't go back and change it. That's the nature of what blockchain means. Once you have information that's been put into a block, then it's actually immutable and you can't go back and change it. So this idea is that you can track drug information when drugs have been created at their source, and then each way along their path through the supply chain. And then you know that when you go into a store and you pick up your prescription, that you can trust that it's been verified all along the chain.
Now, there's a lot of experimentation here. This is Walmart's second blockchain project. Target is also pushing into the space. What do you see as more sort of mainstream potential use cases here?
We're really in an era of ripe for opportunity because nobody's decided what the winner is yet in terms of blockchain technology. So the IBM Hyperledger offering, the Parity offering, which is a private implementation of Ethereum, these are all potential technologies that could really help industries and companies realize these particular applications, like not only supply chain for drugs, but also, for example, there's a company Remedy that we've been working with in order to more granularly track and allow patients to own their own healthcare data.
So, what other trends are you watching? We're talking about big retailers here. What else is next?
Well, everybody's really buzzing and talking about the Facebook coin right now. Obviously, this is a big mover and a shaker in the space in terms of development, is Facebook coming out and saying that they're interested in creating their own cryptocurrency. And their cryptocurrency, the speculation is that we think that it's going to be something like a stable coin, which means it's going to be pegged to some sort of either US dollar or mix of other fiat currencies, and that it will allow Facebook to reward creators on their own platform. And we're still waiting for the true information to come out about what they're calling it, whether it's going to be global coin or whether it's going to be called Libra. But this just represents another company that's large, that's already institutional and has real value, demonstrating that they think blockchain is a way for them to move forward in the future.
Do you think other big tech companies, Apple, Google, Amazon, will try to jump in on the blockchain craze?
Well, Apple's already come out and said that they're going to support cryptocurrency in their next version of iOS. And so I do think that we are going to start seeing lots of big companies jumping into the blockchain trend. We're working with a large insurance company. We're working with a $3 billion asset manager that's interested in listing some assets on some sort of securitized token. So there's a lot of opportunity out there, not just in speculating on cryptocurrencies, but in integrating blockchain technology into real business.
Now, Bitcoin rallied last month, got close to $9,000, now back to closer to $8,000. Of course, Bitcoin and blockchain are two different things, but how do you think the volatility of Bitcoin itself will continue to impact the enthusiasm around blockchain in general?
Well, I think we're going to continue to see volatility in cryptocurrency in general until people are really seeing a real use case in their lives for cryptocurrency. And retailers, real retailers like Whole Foods, have started actually taking cryptocurrency as a form of payment. And I think that once people start having an intrinsic value of Bitcoin in their life, it will really help to stabilize the price of something that for here on out, so far in life has been speculative. But hopefully in the future, when you can start paying for real goods and services, with Bitcoin, we'll stop seeing so much price volatility and speculation.
So when do you think blockchain will go mainstream?
Well, in some ways, we're already here. I mean, Facebook is making a cryptocurrency, but at least in the next 5 years, I think you're going to start seeing real products that actually touch the end consumer in a way that before people have been saying, oh, when we have blockchain, we will X. In the next 3 years, 5 years, I think you'll start seeing people using applications that are actually backed by blockchain, and they won't even know it.
But will Facebook users use the cryptocurrency? That is the question. Kadena, Head of Research and Networks, Monica Quaintance, thank you so much for sharing your perspective with us. Coming up, Alibaba is about to haul in a lot more cash. How the Chinese tech giant plans to raise billions. That's next. And then how Chinese EV maker NIO is planning to weather a series of setbacks. Can it still be the Tesla of China? This is Bloomberg. I'm Emily Chang in San Francisco. Let's return quickly to our top story. Broadcom cutting its full-year revenue forecast. Speaking on a conference call, CEO Hock Tan says the Huawei business was worth $900 million last year, but the ongoing trade uncertainty goes beyond just one customer.
With respect to semiconductors, it is clear that the U.S.-China trade conflict, including the Huawei export ban, is creating economic and political uncertainty and reducing visibility for our global OEM customers. As a result, demand volatility has increased, and our customers are actively reducing inventory levels.
Continuing to follow the Broadcom call as it happens. Meantime, Alibaba is already one of the world's most valuable companies, and now it is planning to raise a whole lot more money, as much as $20 billion. That would come in the form of a confidentially filed new share sale on the Hong Kong Stock Exchange. And if it happens, it would be one of Hong Kong's largest ever share sales. To tell us more in New York, we've got our Bloomberg Deals reporter, Crystal Z. Crystal, what do we know about this offering?
As you mentioned, Alibaba has filed confidentially with the Hong Kong Stock Exchange for a share sale that could raise as much as $20 billion. And this would entail only AIA, and this would be the second largest ever IPO or share sale in Hong Kong. Hong Kong is not typically a place that allows confidential filing, but since Alibaba is already listed in the US, they can file confidentially given that the US jurisdiction allows that. So what we're going to expect is that they will have to go through a listing hearing in Hong Kong, and after they get the exchange's approval, they will go ahead with the share sale.
Now, we know the IPO market in the U.S. has been extremely volatile. How is the IPO market in China, and what environment will Alibaba be entering?
We have seen a quite choppy market in the IPO scene in Asia recently. Yesterday, just last night, there is a logistics deal that got shelved because of market volatility. Exactly. Alibaba will probably not subject to that kind of volatility because it's already a well-known brand. It's already listed in the U.S. So what they're likely to do is to trade the Hong Kong listing at a discount or a premium, more likely a discount, and that would make the price rather easy to predict. But what we would see right now is that we should very closely monitor the trade wall situation, and that would potentially affect where this deal is going to go ahead and whether it's going to go ahead altogether.
What does Alibaba plan to do with this money?
Alibaba hasn't actually come out and confirmed what kind of use of proceeds they're going to be going for. What we know is that they're not short of cash. They actually have about 30 billion of cash in hand, but this is going to be a good platform for them to have an extra listing vehicle in Asia, and they can tap more equities if they want to. And again, given the whole trade situation, it's good to have an equity platform in Asia as a contingency plan in case anything goes wrong in the U.S.
All right, Bloomberg's Crystal Z. Crystal, thank you so much for your reporting on this. Sticking with Chinese stocks, EV maker NIO is in a tough spot, facing plummeting vehicle sales, mounting losses, and a dropping share price. But CEO William Lin doesn't seem to be worried. He explained why to our own Selena Wang in this exclusive conversation from Beijing.
I think our investors don't understand our long-term value. For the standpoint of NIO, we have faith in our long-term value. There are complicated reasons led to the stock rise and fall, which is beyond our control. It's a very complicated thing, especially if there is a short-selling mechanism in the U.S.
But you speak of the challenges in the U.S. Meanwhile, the Chinese government is trying to attract the top technology companies to list on domestic exchanges. Is that something you would consider?
Now the Shanghai Tech Board is still at an early stage. We need to look into its regulations, which is also very complicated. We will consider overseas investors' interests.
So the money that you have from this partnership in China, you think will be enough to last you through the rest of the year?
Broadly speaking, we would like to connect the U.S. and Chinese capital markets. NIO has raised funding from global investors. We haven't raised any RMB funding, but most of the funding are U.S. dollar. Through the entity NIO China, we will be able to raise RMB funding in the future. As per the RMB fundraising, we definitely have a clear timetable. We hope to close the deal in the foreseen future. So far, we are on schedule.
It took Tesla 16 years to become profitable. How long is it going to take NIO?
You can't ask a 4 or 5-year-old toddler to make money. I think it's quite difficult. If you look at Tesla, it has been established for 16 years. NIO has only been established for over 4 years. I'm sure that we don't need over a decade to make profit.
So what are the plans for the United States? If you're not expanding in 2020, how are you thinking about the United States as a market long term?
I'm currently leading a team who's been working so hard, aiming to answer the question, what do NIO's product and service, NIO's community, mean to the U.S. customers? What is the correct way to provide service to them? We will start to provide our service after we figure it out.
That was NIO CEO William Li speaking exclusively to Bloomberg's Selena Wang. Well, a closely watched market research firm has cut its estimate of Amazon's e-commerce market share in the United States. eMarketer now says it expects Amazon to account for about 38% of online retail sales. That's down from a prior estimate of 47%. eMarketer changed the estimate after getting new figures from Amazon. Coming up, will the real Mark Zuckerberg please stand up? How the advent of deepfake videos will have you questioning your eyes like never before. That's next. This is Bloomberg.
Imagine this for a second. One man with total control of billions of people's stolen data, all their secrets, their lives, their futures. I owe it all to Spectre. Spectre showed me that whoever controls the data controls the future.
And that future is going to be riddled with what are being called deep fake videos, just like the one you saw spoofing Mark Zuckerberg. They got the look, not quite the voice. That clip wasn't actually on CBSN, but is the creation of artists Bill Posters and Daniel Howe in partnership with advertising company Canny. It surfaced not long after Facebook was criticized for its decision to not remove a doctored video of House Speaker Nancy Pelosi that was also circulated on Facebook. And deepfakes have now got lawmakers worried, leading House Intelligence Committee Chair Adam Schiff to call them, quote, nightmarish scenarios, and saying that now is the time for social media companies to put in place policies to protect users from misinformation, not in 2021, after viral deepfakes have polluted the 2020 elections. To discuss in Washington, we've got Bloomberg's corporate influence reporter Ben Brody. And Ben, Facebook declined to even take down that video, faked video, of Mark Zuckerberg, saying they deprioritized it, they flagged it, but they left it up, just like the Pelosi video. So what can Congress actually do about this?
Well, a lot of the discussion at the hearing was, what can we possibly do to make sure that these deep fake videos, which it turns out, or at least it appears that a lot of people tend to believe, what can we do to limit their spread? So one idea is you just make tech a lot more liable for the content, and that'll force them to do a lot more moderation. Now, obviously, that's something that big tech, they would find their own nightmare scenario. But the politicians were discussing a lot of other things. How do you get the companies together like they do on terrorist content to swap best practices and find things that is problematic content that is spreading across platforms? Can you do that? Is there a way of identifying them quickly, on the order of seconds, not minutes and hours? Is there a way of labeling them? All these sorts of things are things that they were talking about, but I think that liability issue was definitely a starting place for this and a lot of tech conversations.
Now, Mark Zuckerberg has reportedly called Nancy Pelosi a couple of times about this whole situation. She has not returned his calls. Take a listen to what Pelosi had to say recently about Facebook.
Something like Facebook says, I know this is false, but it's a lie, but we're showing it anyway. Well, to me, it says two things. One, that I was giving them the benefit of the doubt on Russia, but clearly I thought it was unwitting, but clearly they wittingly were accomplices and enablers of false information to go across Facebook.
Ben, what's the temperature in Congress right now about this as we go into what's sure to be a heated election in an already heated presidency?
Heated, I think that's a pretty good way of saying it. Here's a lobbying tip for the people out there. Don't antagonize the Speaker of the House. You don't want Nancy Pelosi or whoever else holds that gavel going on TV and talking about you like that. I think there is a feeling among a lot of the Democrats that President Trump specifically will be willing to amplify this sort of thing, and there might not be willingness, nor particularly should there be, on the Democratic side, I think, to amplify it in the same way, and so that it may be a bit of an asymmetric advantage. That being said, as I watched the hearing today, what I saw was a lot of politicians from both sides essentially feeling that this sort of thing could be used against them by foreign actors, by domestic actors, that it could be used against companies in their home state. There was a lot of concern really across the aisle that this could be something that could ramp up really within weeks and months, and that the current policies that the companies just don't really tackle what these can do.
Right, and there certainly seemed to be an understanding, at least from this group of lawmakers, about how the technology actually works, actually a good grasp of this technology. And the nightmare scenarios, you could go on and on. Presidential candidates saying something they didn't say, world leaders saying something that they didn't say. Jordan Peele actually created this video in cooperation with BuzzFeed, spoofing President Obama. Take a listen.
Moving forward, we need to be more vigilant with what we trust from the internet. That's a time when we need to rely on trusted news sources.
So, Ben, how big a problem is this going to be in the 2020 election?
You know, in politics, if something works, it tends to get picked up, whether by unscrupulous folks kind of on the outside channeling it to the inside or the other way around. So I do think that it is a bit of a weakness in our system. Some of the previous policies of these companies don't necessarily contemplate situations like this, and you're going to have a lot of unscrupulous bad actors, and you have the technology to a place where it's kind of ripened. I could see it getting relatively bad relatively quickly. We in the news media will have to make choices, and we'll have to make some calls. We might be hesitant to report some real things. We might accidentally report some fake things. It's not a place that you necessarily want to be. So I think Chairman Schiff probably made a very good point about the nightmare scenario there.
Well, and you make a good point there that we in the news media do have to make calls. That is our job, and these are calls that Facebook, for example, has hesitated to make. YouTube did take down the Pelosi video. They haven't made calls on other things. But, you know, could we see Congress, you know, pushing these platforms in the direction of you are a platform that is essentially like a news organization, and therefore you need to be held to the same standards?
I think absolutely. You know, there has been over the last year or two, you know, efforts to get the tech platforms to take responsibility or more responsibility for a variety of content, even if it's really those third parties that are posting it. I think we thought for a little while that it might be prescription drugs that might be the next front in this. I could see if this accelerates in 2020 during the election, that this really becomes the issue that Congress pushes on. Of course, election years are terrible times to legislate. So it may not be that they are able to push that forward. But I think there's something important to say here, which is about that Obama video. As ironic as it is, there are uses of deepfakes. There are uses of political satire. And if you can put some context around that, that's usually a pretty good thing.
It is fascinating as it is frightening. Bloomberg's Brendan Brody, thank you so much. Now, speaking of fakes and frauds, German internet payment and processing services company Wirecard is dealing with allegations of accounting irregularities about its growth. Bloomberg's Matt Miller caught up with Wirecard CEO Markus Braun in an exclusive interview in Berlin. Take a listen.
That's untrue. So about 50% of our volume is coming from outside Europe. Let's say consistently we're doing, of course, our revenues and volume with merchants. We have over 300,000 merchants. So this is our growth generation and this is our revenue generation. So this is where the volume and growth is coming from.
Let me ask about the scandals that we've seen in the stock market. I mean, it's interesting because on the one hand, you have 23 buy ratings from analysts out of the 29 that I counted on the Bloomberg today. On the other hand, there seems to be nonstop controversy coming from the Financial Times, SIRF, and a number of other places that create the kind of volatility I don't think German investors are used to. Why is that there's so much controversy surrounding your company?
Let me first say, since going public in 2005, I think we delivered an average share price growth every year of 36%. So I think we have been very successful also in share price development terms. And if you look into our new sales, we had in the second half year of 2018, new sales was up by nearly 160%. So we signed in the second half year 32 billion of new volume. That compares to about 12 billion in the same period last year. So I think we have a tremendous growth development before us. We have big innovations before us. So this is what we concentrate on. I do not too much look into controversies, but my message is I think we have a very strong year before us. We are concentrated on technology innovations. The whole digital digital payment area is still early stage. So, of course, in many areas we are pioneers. And we have been very early going to Asia. I definitely see Asia as one of the biggest growth markets for digital in general, and payment especially, because the first thing that people buy there is a smartphone. And China is a good, let's say, an example. Already 500-600 million people are using their smartphone not only to pay online, but they are using it at the point of sale. So to some extent, we see Asia as a very interesting growth market. We have a very strong year before us, and this is what we concentrate on.
That was Wirecard CEO Marcus Braun speaking exclusively with Bloomberg's Matt Miller. Still ahead, the FBI and the NIH are targeting Chinese scientists searching for a cure for cancer. Why? The U.S. is purging these scientists from top cancer research centers. Next, this is Bloomberg. Twitter suspended thousands of accounts engaged in state-backed influence campaigns originating in Iran, Russia, Spain, and Venezuela. A majority of the accounts came from Iran, which Twitter said all were associated with or directly backed by the government. Separately, MoffettNathanson cut the company's price target to a street low, citing an extreme valuation and potential for a weak third quarter outlook. Shares fell 3% in Thursday's session. Well, call it academic espionage. A number of Chinese Americans are being removed from top cancer research institutions for allegedly sharing confidential information with medical centers in China. The moves are part of the White House's push to counter China's theft of U.S. intellectual property. For more on this week's cover story in Bloomberg Businessweek, we're joined by Peter Waldman. Peter, it is a fascinating story. So you talk about this woman, Dr. Wu, a leading cancer researcher who worked in the United States for almost 3 decades and was basically fired, essentially. What exactly happened there, and was there evidence that she was actually doing something illegal?
Nothing illegal. She was challenged by the National Institutes of Health through her employer, MD Anderson in Houston, for not disclosing professional ties in China. She had relationships, she had research collaborations, sharing of data, maybe some titles, honorary advisory titles in her native country. She is a naturalized American, and they accused her of not disclosing them, and so she ended up resigning after a long investigation that the FBI was quite actively involved.
Now, she then left the United States, left her husband, left 2 children that she has here, and went to work in China.
Correct.
Is that suspect in any way?
It's not suspect. In fact, the people who worked with her for many years and admire her work, she's a quite accomplished epidemiologist. She was the chair of the department for a while at MD Anderson, which is the foremost cancer center in the United States. So it's not suspect. In fact, the way that Lynn Goldman, the dean of the public health school at George Washington University, put it, she said, the only thing we lost in the United States is our investment in Shifang Wu. In other words, this was quite a talented researcher who's now lost to the United States.
Is this happening to other researchers, Chinese researchers in the United States?
Yeah, well, primarily at MD Anderson for now. There are 4 of them that have left in various ways as a result of this investigation. There are 2 more who were fired from Emory University, and there are a whole lot of others under fire and under investigation at least 60 different people around the country.
And in any of these cases, is there evidence of spying?
So not that I am aware of or have come across. I have not read every dossier like I have Shifang Wu's. In her case, absolutely not. And the allegations don't, I mean, spying is a criminal offense. None of these people are charged criminally. The only things they did wrong was not disclose these relationships to the NIH. The NIH is taking an unusual position. They're saying that all basic research should not be sort of shared with China, that is somehow proprietary information because federal dollars helped fund it, and someday it may result in intellectual property, but for the moment it doesn't, but it's still protected.
Well, and doesn't that sort of run counter to the way the medical research community has worked, in that they do share a lot of information globally and between countries because it's all in the name of finding a cure for cancer
well, that's
and helping
right.
people.
That's right. I mean, collaborative research is what people do now. Scientists don't recognize national borders. When they see something in another country, they want to go work with that person. They want to share data. They develop papers, and that's how academic publications work, is it's generally collaborations. You see 12 names on half of all research papers. Anyway, and in this case, it sounds particularly egregious because it is about finding a cure for cancer, and not even a patentable drug or chemotherapy that some big pharmaceutical company or even small one might profit from. It's epidemiology, it's numbers, it's preventive, it's what causes, what's associated, what's linked with causing cancer. So it's really looking for the cause of cancer and not the treatment, but nevertheless, Shifeng Wu is gone.
Is there any recourse? I mean, what's sort of next in either her story or any of these other stories?
Well, the recourse might be that the NIH backs off a little bit and encourages institutions maybe to work with their people on improving their disclosure, maybe going forward, understanding that now the United States is in this sort of economic Cold War. We don't want to be doing too much sharing with China, be more vigilant about that.
All right, well, it is a fascinating piece, well worth a read in this week's edition of Bloomberg Business Week. Bloomberg's Peter Waldman, thank you so much for your reporting on that. You can hear from all of our Business Week reporters on Saturdays and Sundays right here on Bloomberg Television. That does it for this edition of Bloomberg Technology. On Friday's show, we're going to sit down with Elevation Partners co-founder Roger McNamee. That's tomorrow.